and welcome back to this channel. 4 professional approach to analyze pure price action. In this video, I'm going to share with you the best way to analyze pure price action without using indicators. So many traders put their best effort finding the right indicators such as RSI, MACD, Stochastic, Bollinger Band, moving averages, and so much more for their trading setup. The truth is, they are all lagging indicator, which means traders receive the entry signal after the price has already moved. I'm not saying indicator is an evil. In fact, indicators are a great way confirming bias, but I'm emphasizing to focus more on pure price action and less on indicator. Pure price action means using raw candlestick chart pattern without indicator. There are so many ways to find entry trigger using price action. The first one is pattern and formation. You know there are hundreds of pattern and formation which traders rely on them, such as bullish and bearish engulfing, morning and evening star, 3 white soldiers and 3 black crews, hammer and shooting star, and so much more to find their entry trigger. Candlestick matte blending is another way to find your entry trigger using price action. Wedges, channel, triangle, head and shoulder, inside bar, and so much more that you can use to find your entry using price action. Here I'm going to share with you another 4 professional advanced approach to analyze the behavior of pure price action, such as mean reversion, a strong big body candle, momentum, and finally pullback, which gives interesting trading information. The first approach is mean reversion. This is the price trend EOG stock D1 time frame Yahoo Finance. I installed a simple moving average with 42 days period, and the price is going strongly upward above the moving average, and this part of the moving average it considers dynamic support. And here the price is going strongly downward, and this part of the moving average it considered as dynamic resistant, and you see the price is below this moving average here. When the price is in a trend, the candle continually close either higher or lower over a defined number of period. It means it doesn't move in a straight line. It doesn't move in a straight line. And instead, it moves in a zigzag pattern. It moves in a zigzag pattern. This behavior of the trend has a mean reversion tendency. It means the trend, when it goes far from the mean, it would like to go back to the mean. It means in an uptrend, like here, when the price is far away from the mean, these red circles that you see that the price is far away from the mean, then a strong down move will follow soon and also generate a sell signal. Likewise, when the price is far away from the moving average in a strong downtrend, a strong up move will follow soon and also generate a buy signal. Therefore, the price doesn't stay far from the moving average and return back to the mean. Same as a spring. If you pull it from its equilibrium, it will eventually return back to its original position. Therefore, mean reversion is an important part of price action. The second approach is a strong big body candle convey important trading message. The size of the body is telling you the tug of war between buyers and sellers. It's telling you who is ahead Who is in control? Who has a better chance to win, the buyers or the sellers? A long body means strength and larger momentum, and when the body becomes shorter, it shows a slowing in momentum. The size of the body shows how far the price has traveled over the duration of the candle. Traders always focus on large upper or lower shadows, but they forget about the large candlestick body convey a strong message. This is the price trend key stock D1 time frame of finance. And here we have a strong, big bullish Marubozu type candle, which has a larger body with no shadows at all. You see, there's no shadow at all. Why this candle is formed here? Because the buyers find the price interesting and would like to push the price higher. Institutions, smart money, and people with large money buy shares in a big quantity. And that's the reason the candle has a strong close here. This caused the price close way up and sellers cannot compete with the buyers. Therefore, if the price come back to this area, where the big candles open again here, the buyers will come back in the market and certainly push the price higher again with a big probability. Now here we see the buyers appear here at this level and also at this level. And finally, the buyers push the price higher all the way, and you see a strong uptrend. All these things happen because the theory behind a big body bullish candle with no shadow at all. Small body candles convey another trading message. This is the price trend STT stock D1 time frame Yo Finance. Let's take a look at this example. We see the trend is coming strongly downward, and the candles have a strong big body and almost no wicks. Then on the other hand, we see these candles have a small body compared to the previous one and almost no shadows. Here, if we install, let's say if we install a moving average, you will see the moving average. If we install moving average here, you see the moving average will be a straight line, showing there is no volatility and strength in the market, which indicate a period of indecision between buyers and sellers, and neither of them are interested in trade. The war between buyers and sellers are in the standoff, and their forces are in equilibrium. So we see a period of consolidation. Here the traders should wait for breakout, whether up or down, to enter the trade. Therefore, small body like this convey an indecision message. The third approach is momentum is an influential factor using price action. Momentum in trading refers to the sustained increase or decrease in the price of an asset. In technical terms, it is the rate at which the price on a price chart moves. Momentum can also be measured by the angle of a particular move compared to the previous one. This is WCP stock W1 time frame. In this slide, this up move is deeper and have a bigger angle than the previous up move. Here we can say the buyers are still stronger and gain momentum. Hence, we can expect here the uptrend continue upward with a big probability and entry signal for traders. So momentum is another influential factor in price action. Momentum is an influential factor. Second example. This is the price trend SPNY stock W1 time frame. In this slide, this second up move is shallower than the first up move, or the angle of the first up move is deeper than the second one. Hence, this decrease in momentum caused the trend to slow down, or the trend is near reversal. In other words, the momentum has been reduced and caused the trend reverse its direction, going downward and generating a buy signal. Hence, momentum can convey a reversal warning signal to traders. Finally, shallow pullback result in a strong move. A pullback is defined as a moderate drop in price chart from recent peak that occur within a continuing uptrend. Pullbacks are very similar to retracement or consolidation price move, and it occurs as a result of fatigue and profit-taking among traders. Pullback can give us so many valuable clues about the traders, buyers or sellers, and also you can discover where the trend might go next. For example, shallow pullback will tell traders that a big and strong move is on the way, and deeper pullback will tell them the trend will continue in its normal move. This will help you to decide when to enter or exit the trade. One of the best ways to analyze a pullback is using Fibonacci retracement tool. So this is Google stock D1 time frame Yahoo Finance. You see that here the trend is moving strongly downward, and we are going to plot Fibonacci retracement tool out of so many levels that Fibonacci has. We are going to only choose 3 levels. The first one is 0.382, the second one is 0.5, and the last one is 0.618. By placing the Fibonacci tool using the high here and the low of this move, if the retracement doesn't go beyond the 0.382, it's considered as a shallow pullback, and we expect a strong downtrend move. Let's try Fibonacci retracement tool. This is the same price chart, and we plotted the Fibonacci retracement tool here using the high and the low of this move. We see the retracement didn't go beyond the 0.382. This is the retracement, and this is the Fibonacci level, that it comes just on this level, 0.382. So we conclude that the pullback is a shallow pullback, and we expect a strong downtrend move. As you see here, the trend fall down strongly and make a sell-off. We conclude that shallow pullback, this is a shallow pullback result a strong move, and it can help traders to have a profitable trading decision. In this slide, I'm going to show you deeper pullback result in a normal move. This is the price trend, Tesla stock D1 time frame, Yahoo Finance. You see in this chart, the price is making a strong downtrend move, and then we have a retracement that is showing with this arrow, and then follow with a continuing downtrend. Now I'm going to plot the Fibonacci retracement tool to see whether the retracement goes to 0.618 or beyond this level. If it goes to 0.618 level, then we can conclude that the pullback is a deeper pullback and the trend will continue its normal move. Let's try the Fibonacci retracement tool. This is the same price trend as we saw before. Now the Fibonacci tool is plotted using the high and the low of downtrend move. We see the retracement, it goes to this is the retracement, it goes to 0.618. You see it goes to this level. And this considered as deeper pullback. That's considered as deeper pullback. And we expect the trend continue its normal move. As you see here, the trend continue downtrend the same as it was started. We conclude that deeper pullback result in normal move, and it can help traders to make a better trading decision. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.